are live. We're good. Well, we're not really
Hello?
live, but we are recording it, so
Close enough.
close enough. Close enough. As we will be live in the near future. So this is like we're getting prepared mentally for that. So today we're gonna talk about El Salvador making Bitcoin legal tender and the vote passing for it. So it's official. It's gonna be their, let's say, secondary currency to the US dollar, and it will be quite a not a big deal in the sense of like being a big economy that is getting involved with Bitcoin, and a lot of transactions going back and forth with a lot of money going through Bitcoin as a gateway, but more of a test, kind of a like, yeah, as we talked about before, even it's probably, at least it's a first, so it's always a first.
Right. If it works in El Salvador, other countries will likely follow. Like, this is more so as a way to try and help the El Salvador economy than it is to pump Bitcoin. But if it works and, other countries follow, then, it could turn into something really good for Bitcoin.
And my thinking was a potential repercussion is that all these Latin countries in the like close to the US would start using Bitcoin as their, let's say, trading standard between each other instead of using the dollar, so they have a little bit more freedom on what they can trade between each other, what they can do between each other, and they would end up in general strengthening their geopolitical stance in the world, really, because right now they're kind of in a certain sense a slave to the dollar, since it's like their secondary currency, especially in El Salvador. So they are under the decisions really of what the U.S. decides, and now they're gonna under what the decisions of what Bitcoin decides. So we'll see who is better. Is the U.S. dollar better? Is it Bitcoin better for these types of countries, especially for inclusion in the financial systems, since they don't really have that many banks over there, and not all people are banked. So having a system that doesn't rely on the banking system is probably gonna be beneficiary for most of the population that is still unbanked. The question is always, are they going to be able to learn how to use Bitcoin? Is there going to be enough education for those people also to be able to start using Bitcoin, understand how it works, learn all the, let's say, important metrics that need to be followed to, not metrics, precautions more than metrics, precautions that need to be followed for you to use Bitcoin, since any transaction, it really is final with Bitcoin. Like, you send money, can't get it back. It's not like cash that you can get a refund. Well, you can't really even get a refund on cash, to be honest. But going through a bank, you still have that kind of layer of safety where if you make a mistake, you can go to your bank and say, well, reverse this transaction. With Bitcoin, it really is final. So
You need the other party to agree.
exactly, you need the other party to agree. You don't have an intermediary. So the risks and the upsides of not having an intermediary really need to be explained to El Salvadorians, or I'm not sure if they call themselves that way. But what do you think? What do you think about this? What are the possible repercussions of such a big deal?
I see it as an experiment right now. We're going to see if it actually does stimulate the El Salvador economy, if people actually decide to use it. Because, there's a scenario where only 1% of the population actually winds up using Bitcoin and it turns into a nothing burger. But, if this attracts people to the country who may have a lot of Bitcoin, if it causes more people in the country to buy Bitcoin and Bitcoin does well, then, yeah, other countries will likely follow and it will be really good. So it's kind of a wait and see type thing. It's an interesting experiment, if nothing else.
All right, then let's move on to more bullish, let's say like straight up bullish news for Bitcoin. Microstrategy boosts Bitcoin linked junk bond. Why junk bond? Why did they call it junk bond?
It is a junk bond. It's a high risk, high yield bond. They're called junk bonds.
Well, yeah, but it
Yep.
really is to buy Bitcoin. So 500 million. And seems like the interest on that is like 6.12. It's gonna be due in 2028. The company received about 1.6 million in orders for that offering, and of course they're not gonna be able to cover all those people. So they will cover only they already bumped it up from 400 to 500 million. So Micheal Saylor, our biggest bull in the space really at the moment, is going to be buying another 500 million Bitcoin, and all the other people that are going to be left out, probably if Bitcoin is going to go down lower, he's going to just do it again and then buy other Bitcoins. That's my expectation. So he doesn't get everyone in on this, because he could have, like, if he really wanted to, he could have got 1.6 billion in and just bought Bitcoin. But I think it really makes more sense for him to buy a little bit at every every price and slowly buy it up. So he himself will provide support even to Bitcoin in general with his buys. So that's kind of what's going on. It is there's of course there is an upside. There's someone is going to buy Bitcoin. Price is probably going to go up because of that. The question is it gonna be a sustained move up, or is it just how is he gonna buy the Bitcoins? That's another question. Is he gonna buy them through OTC on Coinbase as he did before, or is he going to buy them straight from spot, which is highly unlikely, but if we wanted to cause like some sort of a short squeeze, that is a small possibility. I'd never do that. Because if he is, as he said, is in Bitcoin for the long term, why would he want a short squeeze right now when he would be able to buy cheaper than buying through OTC than buying from spot? A lot of
And it's still taking supply out of circulation. It's still bullish even if he buys OTC.
Yeah, it is. Regardless, it will always be bullish when there's buying going on.
And as long as Bitcoin doesn't die in the next 7 years, he will most likely make a lot of money on this. So
yeah, the expectations, since it's due in 2028, the expectations are probably is gonna make a shit ton of money. That's what I'm thinking. I might be wrong. Maybe Bitcoin in the next 5 years fails completely, goes to zero. I don't see that happening. It is a possibility. Like, everything is possible, really, but thinking about how he set it up, that he's gonna have to pay it back 2028, it's a pretty good move in my opinion. Really good move on his side. For a Bitcoin bull, why would you not buy Bitcoin 50% off from its all-time high? Why wouldn't you? So that's
it's for the long term,
especially if it's for the long term, and this seems to be for the long term. So good stuff. Micheal Saylor, keep it up. IRS chief asked Congress for authority to collect cryptocurrency transfer data. So it looks like the IRS is getting their nose into crypto more and more. They really want those tax dollars.
Yeah, this is just a continuation of the old news that they want all transactions in cryptocurrency over $10,000 to be reported. Pretty much they're being challenged on this, on whether or not they have the authority to. So the IRS is seeking permission from Congress for the authority in order to try and clear up the law. And there's been some pushback on it. Some people want to lower the number to $600. Other senators are citing privacy issues with that. So it's going to be we're going to see how this unfolds.
I feel like this type of like this idea that you would have to track every single transaction above $10,000 doesn't really make any sense, because if you think about it, like, what if I move my money from one wallet to another? This is like a taxable event because I moved my money from one wallet to another.
It's not a taxable event. They just want to be able to track the money. Like, you don't just moving money from one bank account to another isn't a taxable event, but banks still have to report that, and that's the basis for the rule.
Okay, so it kind of would make a little bit more sense. My understanding of this thing was that they wanted to tax the transactions that are bigger than $10,000. At least the previous articles were talking about this. So,
if you make a trade with $10,000, yes. But if you're just moving it from one wallet to another, no, that's not taxable.
Okay, but if you think about this, then how are the DEXs going to be able to be taxed on the transaction on DEXs? How do you... Well, there is a contract that you're signing when you are interacting with...
Well, yeah, no, it's just
DEX.
individuals are responsible for reporting their own, and if they don't and they get audited, they could get in trouble.
Of course.
Right.
So this is keeps... I guess it's gonna probably keep on going forward, and we'll hear from the IRS in the near future to see what exactly happened and what is the reasoning and the reasons behind this. I guess they just want to keep track of what's going on. If you said it's not like transferring from one wallet to another, it's not going to be a taxable event, then it's just tracking. They just want to see where the money is flowing, where is it going from and moving to and all that stuff. So we'll see how this plays out. I don't think it's going to have that big of an effect on the market really, other than for people that are bad players of the market. Probably privacy not that great of a deal, but they're not going to be able to track Monero. They're not going to be able to thrive privacy-centric coins. So if you want privacy, just use privacy coins, and you're going to be fine.
Right.
That's easily the solution. This is quite a funny news. There is also another funny news that is coming up next. Cryptocurrency trading is stopping people from looking for full-time jobs, Career Builder CEO. So it looks like a lot of people are making too much money in crypto. That's what's up. So they're not looking for a job. They just want to trade crypto because they feel like they're able to make money. They're able to make money trading crypto, so they do it and they don't look for a job. So this is in a sense is bullish for crypto in itself, meaning that we are in a bull market, but we did really already know that. So this
it could also be a top signal. So
it could also be a top signal, or it could also be an inflation signal if you think about it, because if everyone is able to return such big amounts of dollars by trading and by holding assets like cryptocurrencies or stocks or assets in general, and they're able to return those level of yields where you don't even need a job anymore, like the repercussions of that, it's obviously going to be inflation. It's obviously going to drive up the amount of money that you make in a job, because the job places will have to look for people. They need to increase the wages. What can they do? They can only increase the wages, so you will get more per hour over time. This also goes after, if I remember correctly, also Chipotle increased their minimum pay to $15, if I remember correctly. Not sure on this, don't quote me on it. Maybe you know about it if they did this, because you're from the US, so you know a little bit more. In Europe, that's the news that I got.
That Chipotle did, or
yes, Chipotle increased their
I don't know.
15
I don't really follow individual companies, but yeah, some companies have been raising their
because they were claiming shortages. They couldn't find employees. They couldn't find people to work for them, so they had to bump it up pretty much. So this is
that makes sense. That's actually bullish, right?
It is bullish for crypto for sure. But
I mean, it's bullish for the job market.
It is bullish for the job market, but the over time, what's gonna happen is yeah, of course, people are gonna take those jobs, but if they still are able to return such high yields, what's gonna happen to the overall economy over time? Like if there's so much cash around, there's so much money around that people don't even need to work. That is not a good sign for the economy in general, for money itself, for the dollar itself, for currency itself. If there's so much money around that people don't want to work, I don't see that being as a good sign overall, especially for people that already have dollars and they already retain the currency. They're losing their share in the currency quite a lot over time, if they're not invested, of course. So
Right. I think that's kind of the misdirection, like focusing so much on the currency. Are people still getting goods and services? Are they still able to afford it? They still have all these issues. Like, that's a much more important issue to me than what the value of the dollar is. The value of the dollar continues to shrink, but people are still able to, live their lives, get what they want. Is it really that big a deal?
it's not that big of a deal for people that are working now, but for people that are retiring soon, that's kind of if they didn't invest, let's say not, I'm not gonna say correctly, if they didn't invest with a higher level of risk and they try to be safe, those people are gonna be hurt by this. Like if we keep on, if there's so much cash around, you will be able to sell services and goods for higher prices because there's so much money around and there's so much demand for the goods and the services, because related to the amount of cash that is around and the goods that are out there, it's gonna drive the prices up, and the people that are gonna pay are not the people that are working now, but people that are close to retirement. Those people, if they did not have a high level of risk, but they tried to keep it as the risk as low as possible, they're gonna be hindered by this. They're gonna have a lot of problems because the dollars that they put aside are now worth less and less and less, which is gonna be a problem. So you have to think also about the repercussions on people that are close to retirement or already retired, that they have like how their salary is not going to be able to grow with the inflation. For everyone else that is working, not a big deal. Like for us, not a big deal. We're working, we're young, so it doesn't really matter to us that much, because if the dollar is worth less, then we will get paid more, right? It's kind of the way that kind of the world works. So this is yeah. So I think we went off onto a tangent, probably that wasn't really fully related with this, but yeah. So this is kind of the news, and then we have our friend the CFTC Commissioner saying DeFi markets for derivatives are a bad idea. And why? Because they are unlicensed, and the other why is because the government can control them. So those are the big whys at the moment that are going around. It's kind of a funny article. I don't see any problem with derivatives on the DeFi markets at all. I don't see any problems. It has to come down to personal responsibility. If you are using such derivatives, you have to know the shortcomings of them, the risk involved with what you're doing, and you have to understand what you're doing. Like if you throw money around, if you go around and you drop your wallet on the floor and you lose your money, should the government protect you from you losing your wallet, or should you be responsible and not to do dumb shit, right? What do you think about this?
I mean, yeah, at the end of the day, it comes down to personal choice. Like anyone who's trading in these derivative markets, it's risky. And if you're putting in more than you could afford to lose, that's your own fault, right? I mean, it's true that it doesn't offer the same protections as the traditional fields, but you could choose if you want to trade in traditional markets. So traditional markets are not going away.
And also you have to consider that all this protection wasn't really there. Just we remember 2008 and all those safe bonds. Well, they were actually junk. They were rated AAA when they were shit. And even in the traditional financial markets, if you do not do the research on what you're investing in, there's so many scams around. And even the CFTC, the SEC, the SEC, they can't catch up with what's going on. It's really hard to be able to spot all the scams from the beginning. No one is able to. You have to do your due diligence, figure out where the scams are, but you have to learn it by yourself. When you figure out what a scam looks like, they tend to look all the same, in a sense, if they are promising enormous yields, if the team is, like for example on DeFi, if the team is completely unknown, they're promising crazy things, or either the project looks like a joke itself, there's a high chance that it's going to be a rug pull. There's a high chance that you're going to lose your money. But every single scam is going to look similar to each other. So if you are putting your money into something that is new and there's no traction behind it, you have to understand the risk that there's a risk that it might be a scam. The same thing, you invest into a penny stock in the stock market, right? it might be a scam. They might be, you know, not like reporting false numbers, doing crazy stuff. You never know, because there's not a lot of people that are doing research into that company. And if you don't do the research yourself, it is hard. There's been so many scams in the financial markets over the years. We had like one of the longest running Ponzi schemes, even with Bernie Madoff. And this was happening in the U.S. and it was, you know, there should have been financial authorities that should have tracked that, but they didn't. So the thing is, it's always down to your due diligence. It's always down to you being careful where you put your money. It's personal responsibility. The bad actors are always gonna be there, and there's really no way to stop them.
They're always going to find a way.
Yeah, exactly. They're always gonna find a way. And even if you can make like 200 laws, they're always gonna find a loophole, because there's always a loophole, right? There's always one. So right now we are moving back up from the $30,000 range. So from the bottom of the range, we're starting to move back to the middle of the range. We do have some significant levels to regain, such as $36,000 to regain that, and we'll probably have a move up towards the $40,000 range and test the top of the range, maybe get rejected from there, and then we'll see what happens, really. The SPX is at a gap up, and now it's starting to move down a little bit. It's founding a little bit of a floor here in the last 2 minutes, so it's trying to move up a little bit also on that. Silver is still in the $28-27 range. Nothing major happening on that side. The total market cap of crypto, excluding Bitcoin, actually put in yesterday a higher low, which is quite bullish. As well as Ethereum, if I remember correctly, it actually put in a higher low. Yes, it did. So this Ethereum consolidation is shaping up to be more bullish than bearish, and at least until we keep on putting in a higher lows, and especially if we go ahead and test again $29,000. There's a highly likelihood that we're gonna break it and see some upside from there. Maybe even test 3.4. It's all up to Bitcoin, but at the moment Ethereum looks better, definitely better than Bitcoin. US 100 on the move up today, quite strong. It looks like it's moving up with volume as well. So there is a chance for the US 100 to actually try to make a new high in the next couple of weeks, or next week, or even this week. So things are shaping up to be looking bullish. This is starting to look better and better. If we do have a move up in the traditional markets, there's a higher chance for Bitcoin to move to the upside, of course, since the correlation between the two. On the upside, we have Coinbase moving up 0.38% today. Bitcoin dominance moving up as well, which means that Bitcoin is regaining a little bit of its strength in the market, because it was definitely losing it, moving down to the lower 40s. Now it's 42.78% dominance. So there is a chance that we might put in a higher low also on the dominance, which means that in the next couple of months we'll see a stronger Bitcoin and some weaker alts. It's not decided yet. We don't really know, because we have to kind of break the 50% to be able to be sure of this kind of trend. At the moment, we're not sure yet of what is gonna happen, and we are not even sure yet if Bitcoin is gonna continue to the upside. Other big movers of the day. What big movers do we have today? Not really. Nothing big really is happening on the altcoins market, it looks like. And yeah, so we're kind of in the middle. With everything.
Just a massive range, lots of opportunity here. Just play the range until we break it.
Exactly. At a certain point, we'll break it either to the upside or to the downside. We don't know yet, so don't make any bets related to that, because it's gonna be extremely hard to predict that. There's always the chance for China FUD, all that stuff to happen again, or Indian FUD, or South Korean FUD, or whatever type of FUD can happen. We already know this. Even if Bitcoin looks amazing at that point, and it was starting to break the range, and then it just goes back into it, the likelihood is then it goes back down to the bottom of the range, test that, see if it breaks it, then it goes to the downside. So sticking with technicals at the moment is probably the best idea. I would say it's not always the best idea. Most of the time it is, though. Most of the time the technicals are always telling you what's most likely to happen. So
I mean, you could just turn the news off, not pay attention to it. Everything you need is in the chart.
Yeah, but the news allow you to. There's always news allow you to build a little bit more of longer term vision of what's going on, in the sense that it's the news build up the narrative for the investment sector over time, and you kind of try to justify.
Narrative.
Yeah, usually it's price that builds the narrative, in the sense if price is going up, bullish news are coming out. If price is going down, bearish news is coming out. It's always that way. I agree with that.
I mean, yeah.
Because people have to justify the price movement, really, somehow. And the news are there to do that, to justify the price action.
And if you look for it, you could always find bullish and bearish news.
Exactly.
So.
That is true. We always have to remember Bitcoin, overall, it's still a macro bull. Like, there's nothing to be concerned about, to be honest, on the macro scale for Bitcoin. We have been making higher lows and higher highs, so nothing to be concerned about. The chances of us going into a multi-year bear market, in my opinion, kind of low. Of course, I can be proven wrong, but we will see. It's probably gonna be a longer term consolidation over here between this big range, until something happens and we decide in which direction we're gonna go. But I'm expecting at the end of this, like overall, longer time, we're gonna go sideways and sideways and sideways. We build a nice floor, and then my expectation is upside. But it's just speculation, just complete speculations. There's nothing in the data that suggests upside or downside from this range yet, other than accumulation happening from bigger wallets. So this is
on the daily now, we have 4 drives of bullish divergence. That could be a little canary in the coal mine.
That for sure could be some there could be some bullishness in that, for sure. So yeah, do we have anything else to add? I don't think so.
Not really.
So I think we're done for today.
All right.
Good night. Not good night, but goodbye. And good luck trading.